from time to time through their various regulations have been making stringent provisions to that effect, like strengthening the compliance structure of related party transactions and all those things. And now, especially the independent directors on the board, they are putting a lot of stress on education, their education on the corporate governance requirements, their education on the compliance requirements, and they are giving a lot of stress on ensuring that the companies have proper tools or systems in place to ensure that the compliances in the company, especially the labor law compliances and the environmental compliances, are in place and timely compliances are happening, so that there is no adverse reaction on the company, because wherever there is an environmental compliance, there is always a risk of the facility or the unit being locked out. So the boards are completely aware of this, and they are they are putting a lot of stress on ensuring that good governance is put into place, good management practices are put into place to ensure that the company doesn't have frequent run-ins with the regulators.
Okay.
Just to add to it, apart from the regulatory push, apart from the board's own instincts, it is also what we have seen lately is that whenever we have investor interactions, we have seen more and more time that is asked for specifically to discuss the ESG angles, which used to not be so common earlier, which we see quite often, because I've been on a couple of calls where it was specifically discussion on governance in a company. Okay. So that also quite an inquiry or a push that we see from the investors' point of view as well.
So I think so overall, if I sum up all three's views, overall we see a lot of push, okay, from every angle, from an ESG perspective, from an and it's not now limited to compliance. Either it's embedding in our system itself that ESG is not one-off activity at an year-end versus an ESG drive throughout the year, what I could hear. But I think so I want to pick up a point from the Deepak, who said about technology, and that would be our last question, but to all. Today, ground level and BRSR report, or your sustainability report, or a lot of certifications what you might be doing in your every organization, you are doing mostly in Excel, or you believe there are tools or systems which you are using or you intend to use, because the data etc. is in itself huge. You can just tell us what ground level things are and what you expect to see in next 2 years.
Okay, now when it comes to BRSR reporting is a new concept which has developed over the last 2 years. So as of now, what I see, at least in my company, is that we follow Excel-based approach, because as of now, the information points are various. We have to collect information from various departments, collate it together, and then put it in the BRSR report. So as of now, it is a physical exercise. But I think there is a scope where technology can come in and it can talk to the existing softwares in the company, like the accounting software, or if there is an environmental software, because there are certain softwares which are installed even by the pollution control boards to monitor emissions and all. So such kind of systems can be implemented in a company which can talk to the existing systems and collate data. These softwares can be even integrated with the HR management systems to find out the number of employees, women employees, differently abled employees, trainings conducted, people attending the training. So this is a very doable kind of a thing. Which will make the report generation a faster activity as well as a reliable activity, because there will not be any physical intervention when it comes to data giving, and unwanted biases can be avoided.
Okay, so you mean, for example, if a company who is doing right now in an Excel, okay, definitely intend to do from a technology perspective, the expectation would be fully automated or semi-automation is fine. When I mean from a BRS or perspective, that if all the factories, all the information, all the HR related, all the information, and definitely from a board meetings and board packs perspective, all the information, if it can be through a system completely, and a report which is generated as a BRS a report from a system, the way we see a lot of consolidation tools, financial statement tools, or we have utility for tax audit tools. What we as chartered accountant understand, if such tool or such technology is available, that would save enough time from a company perspective.
Yeah, it should, because see, BRSR is a vast report, and collecting data from different sources takes time. People, some may have time, some may not have time. So employing such a tool in the company can be a very good idea, provided what I mean to say is that see, there are already the company must be employing some other softwares also, which do the same job. Like what we have in our company is, like, we have a tool which we, being a Wilmar group company, the Wilmar has installed a licensed software to take care of the environmental health and safety reportings across all the world. So there is a common software which takes care of that and reports to Wilmar. So such whatever software we employ should necessarily talk to such kind of softwares and collect data. I mean, of course, that data should be verified at a later point of time. It's not that it can be just blindly relied upon. But at least the task of collecting the data, it can be looked at, it should be explored whether this can be automated.
Okay, nice. So you might be practically considering BFSI sector and huge data, and I remember in IT company or manufacturing company, ERP came very later. In banks, when I used to audit in my articleship days, that time they had ERPs, because it was very difficult, and they shifted from manual to ERP very soon as compared to other industry. So from a BFSI sector perspective, how do you believe whether fully automation on the data collection, etc., is there as of now, or there are mixed practices, and how much from a BFSI perspective? Because BFSI will take much more stringent regulations, requirements from a tool perspective. Just throw a slide so that we have more better clarity and idea.
So I will not touch upon how we are collecting data related to branches. So just to tell, so for branches, all the payments are centralized. So we are able to get all the data at central level. So we get the amount, but we are not getting the number of units. Just we have to just put one field and we would be able to get that. Okay, but for us, the bigger problem is the 1.5 crore plus number of customers which we have, and for which when we have to compute our finance dimension. So that's our that's the starting point of our problems. Then there are other aspects also wherein a lot of technology related interventions which we see we are doing also. So for example, whenever we take any new project loan, above a certain cutoff, so we have to conduct some sort of concept called environmental social due diligence. Okay. Then there is a new concept which has come up in loan proposals, which is known as biodiversity and nature risk assessment. So for all these use cases, so whether it is related to computation of finance emission or environmental social due diligence or biodiversity and nature risk assessment, so the answer lies in technology itself. So there are a lot of tools, technologies which are available, especially paid one, so which can reduce the burden on the banks, but getting a solution which is straightforward, fully automated, so it's not yet possible, but still there are a lot of solutions. So in fact, we came across one India-based machine learning tool, which was very useful in conducting environmental social due diligence. If we are able to just share the location of the factory, and they would be giving a beautiful environmental social due diligence report for that. And there are tools like IBAT which can conduct biodiversity and nature risk assessment for any project loans. And then for measuring our finance dimension, so we are doing that internally, and there are a lot of challenges also, but there are certain tools in the market which can automate that processes. So apart from this, what we also do is assessment of physical risk, which is very important part of bank's risk management process. So what we require is that latitude, longitude data, and which we are not having for our entire loan book. So mostly we have got data for a few corporates at lat long level, wherever valuation has happened, and we have got latitude, longitude data. So then in that case, we are able to, so there are certain tools which are available in the market, which is able to tell that what is the vulnerability of that asset to flood, cyclone, drought. So that we are able to assess. But over a period of time, so internally we have to work on our data points. So we need to capture detailed granular level data. So for example, what is the lat long of each asset, each collateral, each places of production of the customer, so that we will be able to assess our portfolio in a better way. Then for each collateral or factory, what is the type of asset, whether it is a warehouse or factory or commercial building, so that the assessment would be very accurate.
Okay, nice. Many things to learn. I think so in the month of March, April, when we go for bank stat audits, statutory audits, branch audits, we can just ask the branch manager how you are managing ESG, etc. So we'll have more insights from them also. Anup, over to you.
As far as reporting is concerned, we may still go with Excel-based workings, what my sir was saying. But I think for the overall ESG monitoring and reporting, it involves a huge chunk of data. So without technology intervention, I think it's just not possible that we get appropriate results reported and then get ourselves listed on the relevant indexes. So the RPMS, remote performance monitoring systems, etc., specifically from the environment point of view, whatever are the aspects that get contributed to environment leg of it, I think system intervention is something that is must, is what I believe.
Okay, let's see. I think so. Our next the session is on technology and calculations of E part. Let's see whether what we get an insight about how much practically it is possible, how much it's there. I think so that will give us more light whether still we are at a very niche stage where most of the things will be done in Excel, or there are some tools available already which can capture data and not limited to data, but a BRSR report ready. Let's
so
see.
One is compilation of data, one is identifying results. Then analytics is also important aspect of it, because if we see in the overall ESG aspect, and then we have got BRSR report, we have got submissions to be made for indexing, then we have got sustainability report, we have got corporate governance report, we have got annual report, we have requirements in the board's report. There is a lot of overlap that we see in all these reportings. So for example, many aspects which will otherwise be good enough from the social aspect for ESG may not be really the relevant CSR projects, because those are not the projects which are eligible as to be CSR projects from the company law point of view. So now there are the two sets of activities that companies are doing at the same time. One gets qualified for CSR, other is over and above that company does because it wants to do it. So which probably becomes relevant from the ESG point of view at a consolidated level. So if we look at, of course, at a overall level, somebody looking at it from a totally third point of view, you will see now certain information being duplicated at multiple places. So that is inevitable, but only with the time and only with usage of technology, we'll be able to come with something integrated where interlinkages are given and appropriate disclosures are given, which avoiding any duplication in terms of that.
To add what Anup is saying, why technology is important is because it will help you in understanding the trend in which the company is moving over the last few years. So are we improving, and what areas should we improve, or we are where we started? So that is one important aspect, that it will work as a analysis tool.
Very true. So let's see minimum what you are expecting is a board pack or full annual report automated thing. But minimum, let's see in the next session whether we have minimum BRSR automation or not as a step. What your expectation is there? If there are any of the techie guys, they can think and they can start preparing. This is a idea for one. Any of you want to do a startup? Because I have not seen that full pack, including BRSR, including everything, is being still automated. If it's there, new for me. But I think so.
And what is difficult to automate is the impact of the CSR that you have on the minds of the people.
Correct. But I think so. What I hear and see, there are companies on the social impact perspective from a CSR. A lot of automation from a data collection perspective and the results. Definitely, how AI will play from the behavior perspective and putting up some insights we need to see. But nice to see. Overall, I think so. We take a pause. If any questions, if you have to the panel, let's open the house for next 5-7 minutes. Yes, and would request mics to be placed in the auditorium.
So, as Deepak sir and both the Deepak sir have rightly mentioned that in Renuka Sugar Mill, the environmental sector and the social sector, how the importance has been placed, while and also employing 50% of the workforce as female staff. So, but I am confused on the part ki how the things are quantified to get the access to green fund or get an access to subsidized interest rate. Because there will be two sectors of, suppose I have a contact in another sugar industry, they may be employing lesser number of people than what is there in the Renuka.
So, see, first to clarify, on our shop, I was just giving an example. On our shop floor, it is not 50% women, but employment of women or differently abled people on the shop floor has nothing to do with the ESG funds. It is, green funds, what you can say. It is more to do on how your operations are benefiting the environment. That will, this will be the criteria based on which the lenders will apply the parameters of lending on as a green fund to you. Like what we are doing is we are producing ethanol from sugarcane. So ethanol is, as I told you, is a fuel which is more carbon positive than petrol and diesel. And the government is encouraging, in fact, blending of petrol with ethanol. I mean, 20% blending is what the first target is. It might go to more than 20%, and there are vehicles which are coming out, and the government is encouraging, which is running 100% on ethanol. So ethanol being an environmentally friendly fuel, and we being the manufacturers of ethanol, and there are many other companies, we are not just one. There are banks which can give a loan on concessional interest rate to such companies to set up ethanol manufacturing facilities. Because ethanol manufacturing facilities setup is a very costly affair. It can be almost 1 crore per 100 liters. That is the ratio at which the cost is there. So likewise for ethanol, what you say, power generation from bagasse, and all those aspects come into play in the sugar industry, where because of which the banks are starting to view us as a environmentally friendly industry and granting funds for such kind of projects. Like as also said that the Ministry of Agriculture is also running a interest subvention scheme where funds are being made available to the industry, and the interest on that loans is being reimbursed by the from such funds.
Hello, hi, I had a question. My name is Namrata. Thank you so much. It was my first time actually formally understanding what ESG is. So I had two small questions. One was, how much is the cost of doing ESG, not just compliance but wanting to be an ESG compliant company going to hit the PNL in a way, as in the bottom line? And number two is the first thing that hit me when I saw ESG and CSR to be spelled out together. Under income tax, we are not getting exemption for CSR expenses. right? Do y'all, as being in this industry for such a long, see something like that adverse coming in for companies where even the expenses incurred for the purpose of ESG will not be tax deductible?
See, CSR is essentially something which is done out of the profits of the company. So that is the reason why CSR expenditure doesn't get any deduction while you are in your books. Other expenses which make you ESG compliant or you make sustainable are something which are done on a, like, so you want to improve your processes, you want to make your facilities environment friendly, like you want to reduce discharge, or you want to install equipments which can reduce emissions. So all these expenses, if they are of capital nature, you will get depreciation benefits on that. If they are of revenue nature, you will get deductions in your P&L. CSR essentially is something which is done over and above your business. So it is not business of the company, so it will not be allowed as a deduction. That is the reason why it is not allowed as a deduction under the Income Tax Act. But there are certain, you make contributions to NGOs over and above the CSR. So that maybe, I don't know, I'm not the expert in accounts, Chandan might be able to better tell you. So that might be able to give you deductions. There may not be any deductions like for employing female workforce or employing disable-friendly workforce, or making your, if you want to make your, for example, if you want to make your facilities friendly for the differently abled people, these are routine business expenses which definitely I think you can get deductions under the income tax.
Before Anup, you can add. See, from an ESG perspective, just understand E, S, and G. Okay, G already from 1956, the Companies Act were saying you need to be a governed company. Okay, 2013 added to it. It's now through ESG just furthermore pushed, nothing else. So from a cost perspective, G will not add any additional cost to the company other than, yes, you need to comply with it. So from an S perspective, it's saying as the company, you remember long back days before CSR also, Tata, when they planted their plant in Jamshedpur, they did a lot of activities nearby the plant and for the employees. Same is the Reliance when they are planting in Jamnagar and various other smaller mid-sized companies. From an S perspective, it's only talking about the additional benefit to the company employees and the society, and yes, along with it, more with the diversity and inclusivity, so that it's not male-driven economy, it's about including everyone from an S perspective. Yes, from an E perspective, yes, if you, as a company, a manufacturing entity who is using a lot of machineries or the facilities which are generating emissions, you need to reduce it. So from a cost perspective, that's there, yes. An additional cost is cost of the compliance of this and BRSR, ESG report, etc. Those are few lakhs rupees here and there if the size of the company is very big, and it depends here. But the percentage of the total turnover of that compliance cost would be very minimal.
So when
Thank
it
you so
comes
much.
to environmental compliance, if you start measuring the cost of environmental compliance, taking preventive steps to avoid pollution or emissions, as compared to what happens if you don't do it, is very huge. So tomorrow if the pollution control board people come and find out that you're continuously violating the emission norms, they might lock out that facility.
I audited one entity back in 2013, which was incorporated in 1994. I'll just give an example. In 2013, I was auditing an entity which was incorporated in 1994, a plant in Chennai. There was a notice from an environmental department, just 50 odd crores size of the company, 10 odd crores profit, etc. Good, decent manufacturing company. What they were doing, they were transferring the water, oil, etc. through the lake which was there, and the water the various other things were discharged through water to that lake. Okay, in 2013, the local body raised a demand on that company, and that demand amount was 5 times more than the current profit what they had, because they contemplated full lake which was near to their factory, which was lake was not part of the company, but the water through which it discharged. So to say, if you don't comply now, what is written in ESG, today or tomorrow you'll face those problems of not even being existence of that company itself. That's an issue what we are talking about. And I've seen it, and it was very difficult for me to not sign with the provision amount of the quantum which already it was there. I have practically seen it. The factory band ho gayi. There was no choice.
Sterlite is the best example.
I gave that as an example. And many more such industry we are seeing. If you don't comply with those, your existence. Isliye we discussed about business continuity plan, etc. Why those are discussed? Those might be at a macro level. Arey wo sirf tick the box. No, those are real, genuinely essence at a board level for an ERM, for an IFC, for business continuity plan, etc. Those are real things which need to be done now. Otherwise, tomorrow those companies will face an issue. Sorry, Anup, you wanted to add?
Just one point on the CSR permissibility. I think when CSR was brought in, the very idea was that it should be the responsibility of the corporates going beyond the government's responsibility, and all said and done, it will, somebody wants to call it additional tax burden on the company, it is in effect that, and therefore the way it was brought in also, it is not on the PAT but PBT, right? That's why the essence of CSR has always been that it should be done and then taxes should be paid to the government. It should not be taken away from the government taxes. So that was the logic. So I don't see that impact getting over on the ESG, because CSR is very small aspect of it, and ESG related things like he was mentioning about governance. So whatever activities or actions you need to take to set the governance right or environment related aspects right, those are your expenditure, and good. So we can believe at least that there will not be any such disallowance on the expenditure that we incur on that.
Correct. Any last question?
Yeah.
Yes.
So I have one last question. So, see, most of us are from the practice background, and you guys are representing the industry. And like you told that most major organizations already have an in-house team designing the ESG strategy and implementing it. And as such, the role of us in practice consultants is relegated to just doing compliance or some reporting or assurance. So my question to you is, do you see any role for external consultants, or has the need arisen where external consultants can help you out?
So external consultants can help you design your ESG goals. I mean, there will be a multitude of consultants. It cannot be a one person affair or one consultant advising on that. It has to be a multidisciplinary approach. Like when it comes to E in the ESG, it has to be like the technocrats or the technical experts in that field advising on how to be environmentally friendly. When it comes to social initiatives, how to be social, how to be positive on the community side or the social side of it. There are many aspects on like gender diversity, age diversity, and designing of your CSR activities. There are people who might help you in that. There are many consultants who are actively involved in this, and they know what the different needs of different communities are there across the country, across the lengths and breadths of the country, which you may not be aware of. So that that might be one of the the specializations. And when it comes to governance, there are people like Chandan who can help you on this.
I think so. Definitely, Deepak and Anup can add. but I think so there is enough work as a consultant we can do, and I can tell you ground reality from an industry perspective, and they can add. Already there is lot of work which is allocated to everyone in industry, be it the finance, be it the company secretary team, or be it any other team. There are a lot of larger responsibility within an organization. In addition to that, compilation of such huge information, auditing them, when I mean auditing, it's not sign off, really reviewing them and doing all those compliances and getting it done, it's becoming very tiring and practically challenging from a time perspective for them. And hence, what I believe personally, over and above even being the consultant, it's we have to be their working hands and partners who help them complete those tasks. If we have that as an approach, yes, then we can advise them on a lot of things. But if we see just the compliance and the tick the box, then yes, there are many players who would be available for them to take it up. But if we become their helping hands, partners, to complete those tasks, then I think so there is enough work, what I believe. But definitely from an industry you can.
So just to add to the other gentleman's point, so there are only two types of jobs which are coming. So one is AI analytics, so those kind of jobs, and the other one is sustainability related jobs. So if you see where we are at present, and so you have to compare us with what Europe was there about 5 years back. So when discussion on EU taxonomy started, so then they came up with EU taxonomy, then CSRD, then CSDDD, then entire sustainable bonds, sustainable finance. So entire ecosystem of sustainability related aspects. And in fact, now they are in such a position that they have dictated CBAM also to us. Now we are following those, and now we are starting that journey. So we are just at the beginning of that journey. So if you see what is the talent currently in the market, so we have just started with BRSR, and believe me, BRSR is just a droplet in the sustainability related knowledge requirement. So if you go into TCFD related requirements, the kind of work which has to be done in scenario analysis, then transition planning, and there is an entire world which is going to open on account of sustainable finance, then impact assessment of that, then second party opinion related to that. So and now carbon market is going to open in India, and a lot of verification related work is going to come up. So there is a huge market which is going to come up, and in fact, so now it is told that people at the top, if they are not aware about these two knowledges, whether it is AI related or whether it is sustainability related, so they will not be able to fit into the business. So even if someone is not working directly into sustainability, but they need to understand this. So that's the kind of market which it is going to open.
So the bottom line is the board needs to have a sustainable mindset for the company to be sustainable.
I think so, thanks. I think so that's, we can stop.
Thank you so much. Let's have a huge round of applause. That was truly an engaging conversation, and thank you to the audience as well. Now I request RCM Rudesh Pankania to please present a memento to CS Anup Deshpande. No problem. Please, Rudesh sir, please present a memento to Mr. Deepak Kumar. Sir, please join us to present a memento. Yes, yes. Ritesh sir, please present a memento to CS Deepak Manerikar sir. Also, Ritesh sir, please present a memento to CA Chandan Lavati sir. I'll request Supriya ma'am to join on the dais for a group photo. Also Shayak Chatterjee, please. Thank you so much, everyone. Thank you to the panelists and the moderator. We'll have a 5 minutes break for tea and we'll join back for the next session sharp at 4.